Fewer and fewer people actually have pensions today. So if you've got one, you got something precious. Should you elect to take your pension as a lump sum? This is The Wealth Technique. I'm Michael Baker. Let's get into it. Thank you for visiting the channel. We're talking about pensions. If you've got a pension, you may be asked whether or not you want to take that pension as a lump sum. And let me tell you, there are so many mistakes that people can make when thinking through this problem. The first one, I will tell you straightforward. Very few people get to make this decision. So be mindful who you ask for advice, because a lot of people have never had to choose whether or not they should take a lump sum. I think that you should only make this decision after you've done some careful analysis. So first up, do some actual analysis. Understand your choices, understand the options, and know what would likely be the best combination of options for you. Pensions essentially are designed to be paid out to you in the form of a paycheck. It was a way of continuing a worker's salary in retirement. Not all pensions are calculated the same. So the first thing you want to make sure is, how is your pension benefit actually going to be calculated? The next thing is, what are the payment options like? If you're married, you may have the option to elect for survivorship. Understand the payments, how those payments work. And if you need help, don't hesitate to seek help from a competent financial planner or financial professional. Next, you want to think about you specifically. America's favorite financial advice guru is this person called Google. We like to go to Google and ask them everything. Well, one of the things that Google can't do is tell you specifically what would be the best thing for you. You have to know yourself. You have to understand your specific risks and understand what would be the benefits to you in any type of financial decision like this. So you want to make sure that you've done your analysis, and now you begin to apply that analysis to you and your specific situation. It doesn't matter what your friends say. It doesn't matter what your neighbor says. It doesn't matter what your coworkers are doing. What matters is what will be the ultimate best impact for you. Some of the things that you should consider your health. Are you healthy? Is your spouse healthy? Consider how old you are. How much time do you have left to continue working? Other things to consider: the actual company. Has the company sold your pension to an insurance company? Or is the company itself still running the pension fund and managing it internally? How is the pension handled? Is the pension fund solvent? Do they have enough reserves? Are you curious about whether or not they'll be able to pay the benefit out? These are some of the questions that you should ask yourself when it comes to actually understanding and identifying the best course of action for you. Another piece that you should consider is, maybe you want to have money left over for beneficiaries. It is not uncommon for workers who have worked for a large number of years to have built up a pretty sizable lump sum benefit. If you don't feel like you need the cash flow or the additional cash flow from the pension, you may think that that lump sum benefit would be better served moving out of the pension and onto your specific balance sheet. Again, I highly encourage you to consider working with a competent financial professional that can help you do this analysis. Think about tax implications. Pensions are going to be taxed whenever you begin taking the paychecks. If you take the lump sum, you should be very careful. Unless you have worked with a tax professional and done this math, do not take this as a distribution. What you want to do is to do a transfer from the pension fund into an IRA. This transfer is not taxable. It's not a taxable event. It's a reportable event, but is not a taxable event. If you elect to take a distribution where they send you a paycheck, and I've seen people do this by mistake, that full distribution is actually going to be taxable, and it could blow up your taxes. So when we think about taking the pension as a lump sum, we want to be equal parts thinking about what our needs are today, what is the best situation for us, what could be the implications for the future, and we also want to think about what could go right versus what could go wrong. One of the big mistakes that a lot of people make is they think that they could take the lump sum and actually manage the cash flow better themselves than what would be coming as in the form of a guaranteed payment. Remember, one of the beautiful things about pensions is the pension itself is designed to be a lifetime income payment, meaning as long as you're living or as long as you or your spouse is living, that payment is coming to the household. Can you duplicate that type of income stream managing this on your own? Some people feel very confident that they can. Some people are not confident that they can do that at all. So be mindful of those choices. One of the worst things that could happen is you elect your pension as a lump sum, invest it in the stock market, and we go into a bear market where you then have almost a permanent loss of capital. As for me as a financial planner, I would say the most important thing that I think anyone should consider is think about your specific situation and what would be best for you. It's not just about thinking about what could go right. Also give yourself permission to think about what can go wrong. Actually think about all those circumstances, apply them to your situation, and then lastly, work with a competent professional. I can assure you, you want to work with a competent financial professional when making this decision. In fact, maybe you want to get 2 or 3 different opinions about what you should do. You get to make this decision one time. You want to make sure you've thought through it carefully, you've given it some additional due diligence so that you get to make the best decision for you. I hope this video has brought up some food for thought when it comes to claiming a pension. As I said before, not everybody gets to make this decision, but when you do make it, it's often final. So you want to have carefully thought through your options. I can't encourage you enough. Talk with a competent financial professional, 1, 2, or 3. Get some good quality feedback for yourself. If you have questions, drop those in the comments below. Don't forget, like this video and subscribe to the channel for more videos like this. My name is Michael Baker. This is The Wealth Technique.